Welcome to Bears in Exile. Today is September 30th and it is the weekend market overview. We're getting this one out of the way on Friday so that we'll have the weekend to work on some other stuff for the website. So away we go. With our normal starting off with the Dow, big ugly red candle, continuation candle, just totally massively ugly, complete opposite of yesterday. In that, instead of having the little buying frenzy at the end of the day, we did the precise opposite. So much for window dressing. What a ugly day. 240 points to the downside, closing below the lower price consensus level. Short-term moving averages pointing down. Still have the middle Bollinger Band above them. Totally, completely ugly. Lots of warning signs in here, so yeah, that's that's pretty good. Notice we have the hook of the stochastics today, both the fast and the slow moving in concert with the 14-day moving average, which we're always looking for this. So I'd actually hoped that they would have gone just a little bit higher and then hooked over, but hey, today was the hook. So powerful move when they move in concert. Downtick on the CCI, the RSI, the MACD, and the histogram are just hanging out at zero. That's kind of strange. All of our short-term time periods are ugly. Just a quick look. And ugly, I mean stochastics going down, or the 14-day RSI moving average, and or the MACD. So the 180. Important stuff, sloping down. 60-minute, all the important stuff, sloping down. 30-minute, still sloping down. And even the 15-minute, sloping down, moving in concert. So, ugly. SPX, more of the same. We have not breached the lower price consensus level yet, and I would expect that to be at least some kind of resistance, but you know, we're going to see. And we've been waiting for that. It does line up with the previous low, close to, and like always, we were watching the 14-day RSI moving average and the stochastics, and it's unfortunate they didn't get above the 14-day moving average, so there is the possibility that these are going to go down, you know, rather quickly, leaving the 14-day RSI moving average, and then have some sort of a stall or a slowdown as they, you know, turn up and go back up to meet it to complete its move. It just seems like it has a little too much room to get all the way to the bottom without needing a recharge of the stochastic, but we'll see. That's what I see. And of course, more expansion on the short-term moving averages. This is definitely very bearish. The VIX. Alright. Well, for one thing, we're above 42, which is a kind of a make-or-break area, in that the talking heads have been saying, oh, 42, big resistance, blah, blah, blah. Well, we're almost at 43, so that's really good sign. All it needs to do is break the upper price consensus level, and it's in fantastic shape. 14-day RSI moving average, all kinds of room to move to the upside. Still room in the stochastics, plenty of room in the histogram and the MACD. This is looking really good, and we have been saying that we're expecting a big drop-off sometime soon, most likely next week. This chart certainly seems to indicate that that is more than possible. Notice the short-term moving averages getting extension, separation, and all pointing up. This is very bullish. Moving right along to TNA. 33. Woo! Testing that newly made low. Short-term moving averages pointing down. Of course, we're still below the lower price consensus level. We have room to move in the 14-day RSI, stochastics, RSI, MACD, histogram, CCI, you name it, it has room. So with that in mind, those previous predictions with black box number 1 of it going down into the 20s doesn't seem so far-fetched now, does it? I don't think it does. And that was called out weeks ago. Weeks ago. Going right along to UUP, the bell of the ball. Ended with a hammer, and sure enough, it is right at its recent peak of the short-term moving averages, expanding some more after it did its bubble corrective move, which I guess I'm just going to say is close enough to be met. It's kind of obscured by the middle Bollinger Band, but it's going to have to be close enough. After all, today is the 4th day, so I guess that was enough. And but yeah, ended with the hammer. Some people could say, oh, we can have a double top here. Yeah, we could have a short-term double top here, absolutely. But and we do have some warning signs. CCI high, 14-day RSI moving average. We're still waiting for that hook to hook. But the stochastics are pointing up. The RSI is pointing up. It still has room to move. MACD got a higher tick today. Got an uptick on the histogram. For the moment, it is going to hold. And if it's able just to stay up there for a while, this sucker could move a good bit. But like we said on the last video, waiting to see this 14-day RSI moving average to hook. That will be the tell. FXE, perfect inverse, ended not with an inverse hammer, but still had a little bit of a tail at the top. Short-term moving averages, of course, pointing down. All the secondaries ugly, not attractive. Nobody is buying the Euro TARP news, and they're waiting for some more concrete, lies, really. But we've covered that in previous videos. And going right along to gold, had a mildly positive day, inverse hammer. We still do not have an uptick. If we had closed at the highs of the day, we would have had an uptick, but it didn't, and we don't. 14-day RSI moving average still waiting for the hook. Stochastics clicking up a little bit. CCI, RSI, histogram, and almost with the MACD, but not quite. So it does appear that we could have a momentum shift at any time, but until we get that 14-day RSI hook, I wouldn't really trust it. And SLV, another red day. How interesting that gold did so much better than SLV. Of course, we have no uptick. We still have excessive separation and wobble, and we do not have our hook yet for the RSI, 14-day moving average. So overall, things are very bearish, so long as UUP holds its position. And it does look like it's in a somewhat precarious position, but until we have that hook, we're okay. And we'll have more videos coming this weekend. I'm not entirely sure which ones we're going to cover. Maybe another hit of CNO, probably a Vegas baby. That one has had all kinds of movement. So definitely, yeah, we will cover Vegas baby, and maybe a few other things too. But as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.